Welcome, everyone, to today's presentation. Five things every Muslim investor should know. No matter where you are in your financial journey, it's a good idea for Muslim investors to review the fundamentals from time to time. It helps you to feel confident as an investor and also to make informed decisions about your money. By reviewing the following tips today and maintaining a focus on halal investments, Muslim investors can build a portfolio that aligns with their faith and their financial goals. So, with that, let's get started. I'm Josh Brockwell, Investment Communications Director here at Azad. I'm responsible for all things marketing and also spearhead our shareholder advocacy program. I'll be your presenter for today. For those who may need a refresher, here's a look at who we are. For over 25 years, Azad Asset Management has been helping high income professionals build their wealth in accordance with Islamic values. Today, we manage around $1.6 billion in assets under management for more than 1,000 families across the United States. What makes Azad unlike many other financial firms is the quality and nature of our advice. It's centered around you and your family, driven by a higher purpose, and designed to help you give you peace of mind knowing that your financial life is on track. Moving right along, as a reminder, we are a full service financial planning advisory firm. Here's an overview of the services we provide on your screen now. From investment planning to tax and charitable planning to halal financial services, we have positioned ourselves as the leading provider of halal financial services in the United States. With that, let's jump into our content for today. So, first up, stocks and fixed income are the basic building blocks of most portfolios. The number of investment choices out there can be overwhelming, especially if you're still somewhat new to investing, but even if you're not. But stocks and fixed income investments like Sukuk are the basic building blocks of most halal investment portfolios. Do you know the difference between these two assets? Let's do a quick review to find out. First up, stocks. When you purchase a stock, you own a piece or a share of a company. Stocks are sometimes referred to as equities. Those terms are used interchangeably in the financial industry. In addition to owning individual stocks, which is usually not a good idea for risk purposes, by the way, you can hold stocks through various investment vehicles, including separately managed accounts, mutual funds, and ETFs, to name a few. Observant Muslims need to avoid, however, company stocks that deal in haram industries or have excessive interest income or debt, as defined by our scholars. We'll talk about that in a little more depth in a few moments. Next up, fixed income. Observant Muslims, for those of us who are observant, fixed income is tricky because the options are limited. But there are halal options out there. One of them is the Azad Capital Fund, which is a halal fixed income mutual fund that holds alternative products like Sukuk and Islamic bank deposits. Talk about that in a second. In case you're wondering about traditional fixed income, a bond is a loan from an investor to an organization or entity, like a corporation or a government, like municipals. Those entities are looking to raise money to help pay for certain projects. So, sort of think of it as an IOU when you're thinking about bonds. The problem is they're based in interest or riba, which is prohibited in Islamic finance. When you have questions about the appropriate mix of equity and fixed income investments for your goals, by the way, consider talking to an Azad financial advisor who can help you put together an investment plan. So, very quickly about the Azad Capital Fund. To properly diversify across different asset classes, you do need to incorporate fixed income into your portfolio so that you can control or help control the risk level or the expected risk of your portfolio. However, the majority of fixed income out there is riba based. So we launched this fund in 2010 to fix that. The Azad Capital Fund is similar to a short-term bond fund in that its holdings have a maturity of 1 to 3 years at most. The fund aims to deliver income while limiting the volatility associated with longer-term bond strategies. It's focused on capital preservation through high-quality diversified investments. And these investments include Sukuk, Islamic bank deposits, and trade finance, among other things. The fund, by the way, is managed by a 3-person team at Federated Hermes. That's a firm with extensive experience in this area with multi-billions in assets under management. Next up, investing involves risk and it's important to focus on the long term. Very important to remember. Some people might feel unsure about investing in the financial markets because it's generally riskier than keeping your money at home under the mattress, for example. And that's understandable. After all, investing does involve risk. No one likes the idea of potentially losing money to a bad investment or market fluctuations. See those all the time. So, why, you may ask, do people invest at all? Well, one big reason is that inflation, which is basically rising prices, reduces the spending power of your money over time. So you need to find a way to keep up with the tendency for inflation to rise over time. And while there's potential for losses with investments, there's also the potential you'll see some pretty nice gains. A large part of investing is about figuring out how to properly balance risk and reward and which risk management strategies make the most sense for you. Sure, watching financial markets go up and down can be absolutely nerve wracking. We see it with clients all the time. But keep in mind that periods of market turmoil are normal and really expected. That's why it's important to take the long term view with investing and not let those short term market fluctuations distract you from your long term financial goals. For example, retirement, wealth building, etc. Staying invested for the long haul puts you in a good position to reach your goals over the long term. Let's talk a second about tawakkul. So, tawakkul in Islam refers to placing one's trust in Allah while taking the necessary means to achieve a goal. It's a balance between effort and reliance on God's wisdom and decree. So, when it comes to investing, what does it mean to take the necessary means then? In essence, tawakkul in investing from an Islamic perspective means a few things. It means diligently learning about investments and financial management. It means implementing strategies to manage risk and achieve financial goals within the boundaries of Islamic finance. And it also means recognizing that the final outcome is determined by God and placing trust in his plan. It's a combination of responsible action and unwavering faith, trusting in your decision over the long term after taking the means to succeed financially is an important part of every Muslim investor strategy. So that's tawakkul. This brings us to our next 2 points, by the way, diversification and risk tolerance. First, diversification. When it comes to deciding where to invest your hard earned money, it sure would be great if we could invest in a sure thing, but there's no such thing as a safe, quote unquote, investment, and it's important to learn how to manage risks in a smart way. Just like any other investor, diversifying your investments is crucial to managing risk. One common risk management strategy that you're probably familiar with is diversification. This is where you divide up your money across different types of investments or assets to help spread out your investment risks. You may know the saying, don't put all your eggs in one basket. And while that's the basic idea behind diversification, while it might sound like a basic strategy, it's a powerful one. By investing in a mix of assets like small, mid, and large company stocks, as well as halal fixed income, which we talked about a moment ago, if a certain asset class isn't doing well, other assets in your portfolio might be able to help offset some of those losses. In other words, diversification can help limit your exposure to the risks of any one single investment. Think about it this way: if you only invest in the stocks of one company, you risk losing your entire investment if the company goes under. An important note here: while diversification can help minimize risk, it can't eliminate all risks. Just as diversification doesn't guarantee gains, it also doesn't completely shield you from losses. There's no such thing as a perfectly safe investment. And if anyone tries to tell you otherwise, be wary. And of course, ensure that your portfolio is diversified and that it's still aligned with halal investing guidelines by working with qualified as an advisor to walk you through that process. Now, a quick word about Sharia compliance. It's crucial here for the Muslim investor to make sure that a diversified portfolio adheres to halal investing guidelines. In a nutshell, halal investing touches on avoiding investment in the following: interest or riba, which we've spoken about; speculation, excessive speculation is called gharar; also uncertainty, which is maysir; debt; and companies with unethical lines of business. It means avoiding these for things. These are outlined in detail by the Accounting and Auditing Organization for Islamic Financial Institutions, also known as AOFI. AOFI is followed by Azad Asset Management, and our firm is audited annually by a third party to confirm compliance with AOFI guidelines. Keep in mind, halal investing often requires working with a qualified advisor because stocks fall in and out of compliance on a fairly regular basis, so it's important to monitor regularly too. In addition, Muslim investors need to have accurate financial data from service providers who specialize, keyword there, specialize in tracking halal investing criteria. That's part of our value add at Azad. Next up, your time horizon and risk tolerance can help determine the appropriate mix of investments in your portfolio. Time horizon is simply the amount of time you're planning on staying invested. Your time horizon typically depends on your age, investment strategies, and financial goals. People who won't need to tap into their investments for a while, for instance, those who are like a long way from retirement, they would generally have a longer time horizon than, say, people who are investing money for a down payment on a home that's 5 years down the road. If you're already, if you've already got a time horizon in mind, another question you should ask yourself is how much risk you're willing and able to take in your investments. In other words, what's your risk tolerance? Risk tolerance varies from person to person, so it's important to understand your personal level of comfort when it comes to investing your money. And Azad Advisor can work with you again to help determine a risk profile that fits your investing personality. We're all different, right? Hey, quick note here. Incidentally, some linguistic theories suggest a connection between the English word risk and the Arabic word rizq, meaning provision or sustenance. They say it could relate to the concept of fate or divine allotment. A rizq is a portion, anything allotted by God, and from which you gain profit. Some say that whatever risk is out there caused by human beings should be viewed as coming from God and that they should be pleased with it. So just something to keep in mind. This also, by the way, doesn't mean you should take on too much risk, but it also doesn't mean that you should completely avoid risk either. Going back to what we said before about tawakkul, it's all about recognizing that the final outcome is determined by God, but we take the means to position ourselves for success. Next up, this one isn't unique to Muslim investors, but it's important. Be aware that different types of investment income are taxed differently. As an investor, it's important to understand that there are tax planning strategies that you could use to help minimize your tax bill. So, tax planning refers to an advisor's review of your tax return to identify potential planning opportunities, both now and in the future, to keep your lifetime tax liability as low as possible. This is different than tax preparation, usually done by your CPA or an online service like a TurboTax, which is focused on keeping you compliant with what the government thinks you owe each year. When it comes to tax planning, it's best to work with an Azad advisor and a tax advisor both to find an appropriate strategy for your goals. Something to keep in mind there. And by the way, even though it isn't a tax per se, zakat is something that you owe from your investments as well. And it's a crucial part of any Muslim's investing plan. Zakat's the financial obligation every Muslim must pay on surplus wealth above a certain amount, which is called the nisab, that they've owned for at least a year. Azad calculates zakat every year on investment and retirement accounts owned by its clients for the last 12 lunar months. Calculations are usually performed a week before the month of Ramadan. Purification, by the way, which is also on your screen, is a process. It's a cleansing process, really, that accounts for the income of investments that may be generated from unlawful activities, according to AOFI. It involves the donation of income earned from any unintended and unacceptable business activities by companies in which a shareholder is invested. Although Azad, of course, follows strong and strict halal investment guidelines when investing for clients, we advise them that it's still possible to unintentionally earn small amounts of income that's deemed prohibited, for example, interest income, below a de minimis amount, as outlined by AOFI. So it's important that clients give this away in order to purify their accounts. After that purification is subtracted or netted out, Zakat is then calculated on the pure assets that remain in an investment portfolio. Finally, whether you're a long term investor or a relative newcomer, it's important to understand your investment goals. What are you investing for? How long do you want to stay invested? And how much risk are you willing and able to undertake? These are just a few of the basic questions you should ask yourself periodically as an investor. Your answers are going to help you choose an investment plan that's best aligned with your needs. And if you have questions, enlist the help of a professional Muslim financial advisor, please, who can go over what we've covered here in more detail and help you to invest confidently for your future. And speaking of questions, let's get to those right now. And you'll be asking questions through the Q&A box at the bottom of the screen. It looks like a couple folks have already happened upon it, and seeing those come through now. Oh, just out the gate, the first question I'm seeing is whether or not a copy of the slides will be available. I'll note that a recording of today's presentation will be sent out as soon as we render it, upload it, all that good stuff. As far as the slides themselves, um, maybe the easiest thing to do is just shoot us a quick note. We'll go over the contact information at the end today when we wrap up, but it's the email is probably best. It's hello, HELLO, at azadasset.com. Going through here, some of the other questions. Um, I do have a note on Zakat asking about further clarification on that. I will mention that if you're an Azad client, you will have already received your Zakat statement. It should have been uploaded to the client portal. If you have questions, talk to your advisor about that. That's a service that we offer our clients. I mentioned as well a moment ago our focus on charitable planning, tax planning, all that good stuff. That's one of the many services that we offer at the firm for clients. Generally speaking, if you have questions about Zakat and are not a client, I would refer you first and foremost to a local scholar, an imam. And then also, I would note that we had our 21st annual, actually, Zakat webinar last month. A lot of folks joined, a lot of folks appreciate that content. We get some general questions, and it's pretty thorough in terms of the different categories and how specifically assets are treated. Financial assets, that is. So when we're talking about, just to give you a general outline, when we're talking about calculating zakat on financial assets, you have to look at sort of how the asset is being used, what the intention behind it is. If it's an asset, in a nutshell, very quickly, if an asset is intended for appreciation, that has a certain zakat treatment, as opposed to an asset that is intended for income. And then there are a couple other instances in which we would look through, but sometimes it's 2.5%, sometimes it's less, because you have to look at it as a cap base, because something that is intended for appreciation is different than trade, and so on. So a little bit complex. Again, if you're a client, you got an easy fix, which is the statement that we generate every year in Ramadan. Moving right along, have a question or two here about I see one just generally on Sukuk. We talked about that with respect to the Azad West Capital Fund, which is Azad Asset Management's fixed income Sharia compliant mutual fund. Do take a look at our website, azadasset.com, for information about the fund itself. There you're going to see their prospectus, which is going to talk about risks, fees, expenses, etc. But generally speaking, the Azad West Capital Fund is largely a Sukuk fund. There's some other holdings in there that also help to generate a return, and a fixed income stream of revenue for a shareholder. But basically, Sukuk are the majority of the fund, and it's sometimes translated as Islamic bond. Not the best translation, because bonds in their pure form are basically just IOUs and they represent a loan to a company or a municipality sometimes. But sukuk are asset-backed or asset-based securities that provide a return similar to a conventional bond, but are still grounded in those Islamic principles in terms of risk sharing and ownership. There's an equity component there, so it's very important to look through to that when looking at sukuk in particular, and as opposed to investing just in traditional fixed income, which would be impermissible Islamically. So a follow-on question to that is, isn't fixed income a problem when it comes to Sharia compliant investing? Well, no, really, because Islam isn't opposed to profits. It's opposed to the potential exploitation that arises from lending with interest. That's why the Azad West Capital Fund, our fixed income mutual fund, is focused on securities like Sukuk, which I just mentioned, as well as some other products like Islamic bank deposits. And these are alternatives from which both parties can benefit. Moving right along here, there is a question that came through regarding uncertainty in markets right now, and a lot of the turbulence associated with trade policy and I guess the incoming administration and some of the uncertainty and turbulence around that. Clearly a concern for everybody, especially because we saw markets hit all-time highs earlier this year, then pull back. The S&P 500, which is kind of a proxy for the market more broadly, entering into correction territory very recently. It's come back a little bit, so it's up and down, but generally there's concern. We saw the Fed come out just the other day, yesterday, and talk about how fundamentals seem good, but obviously there's still some concern. So questions about whether or not a recession is on the horizon. So to answer that, I mean, generally, if you look at any economist, it's an interesting data point. There's always kind of built into any calculus a 15% chance of a recession in any given year. Some of our portfolio managers have revised that up. Some others out in the marketplace have not. But recessions are a normal part of an economic cycle. They usually occur like every 6 to 10 years. A recession is not the same as a correction. I should add, a correction is a market pullback of 10% from recent highs. Recessions are usually dated after the fact, and they represent 2 consecutive quarters of negative economic growth. But obviously there is a relationship, and people are concerned about investing in light of the potential of a recession and the possibility that the current administration could precipitate that. But really, at the end of the day, whether it's manufactured or occurs naturally, it's a part of the economic cycle, and it's a part of investing too. So there's a lot of uncertainty. Again, the Fed's come out and said the economy is strong. 2025, though, is uncertain, regardless of where the economy and markets may be going. What's clear is that investors need to have a resilient investment strategy, and that's typically done in concert with an Azad advisor. So you would want to have a conversation, right? Review the portfolio, assess your risk exposure, things like that. That's really essential, especially after those recent gains that I mentioned that markets have seen. So we're coming on, we're coming off the heels of 2 years of 20% plus stock market gains. That type of pace is not really sustainable. So these recent gains really merit a conversation with the advisor, and hopefully you have one. If not, let's talk as well, and we'll talk about the contact information at the end today. But there are a couple other things, in terms of diversification across global equities. I mentioned halal fixed income already with the Azad West Capital Fund. These are ways to help manage some of that risk. Let's see what else we have here in terms of questions. Folks are asking about Azad's investment options versus those in the marketplace. So I would encourage you, I'll just offer a general answer with respect to our value proposition. What we do at Azad is really, in many ways, unique in that we're a full service financial advisor offering holistic financial planning, including Islamic wealth management, which we've talked about already. But those things along the lines of charitable planning, estate planning, tax planning, I mean, those are all part of the package when a prospect or client comes to work with us. So keep that in mind. Now, that being said, when we talk about products, obviously a lot of folks are familiar with the off-the-shelf Azad mutual funds, including the Azad West Capital Fund, which again we've mentioned already. We also have a mid-cap growth fund, the Azad Ethical Fund, ticker symbol ADJEX, which you can also check out. So those are broadly available in any mutual fund marketplace, really off the shelf. If you're a client, what you have access to is much more than that. And we're talking about strategies that are not mutual funds. So you're not going to see them quoted on a Yahoo Finance or Morningstar.com or something like that. Those are kind of the big information or databases, the information clearinghouses where you can find information on investments. So with us, we have separately managed accounts, which are basically custom portfolios of individual stocks held for each client. So it allows for much greater efficiency, often from a tax perspective, in terms of customization when it comes to preferences you might have specific to your situation about holding a stock you really don't like X. Well, we can remove it, whatever that stock may be. That's not really what you see with mutual funds, which are really a one size fits all. You can't change the portfolio. It's what you see is what you get. So among the many different investment options that we offer clients, you check all the boxes. You've got mid, small, large cap, growth, value, international, dividend, REITs, kind of everything in between. So as well. So really, it's more of a custom solution. One size fits all really isn't the name of the game here. So that's really something that we, I think of ourselves as being set apart from in a lot of ways when it comes to the competition. So think about that. Sometimes you have a tendency to compare, or folks, not you in particular, but apples and oranges, which really doesn't always work. Rarely in this case. So yes, there are individual investments out there that you can look at, but if you're looking for a full service, holistic financial planning solution, then we would be the place to come. Let's see, moving right along. Question about purification. So we had mentioned earlier when we talk about zakat, this is an obligatory part of Islamic investing. Also, really something important to keep in mind during the month of Ramadan, which we're in now. It's a lot of folks are looking more seriously at their finances and their portfolios, investment portfolios in particular. When you're calculating zakat, if you're not a client and you're doing it on your own, which is very difficult to do, by the way, but that's another conversation for another day. The first thing you do before you even begin to calculate your zakat is you calculate what's called purification. So kind of alluded to it, just a little more detail. Purification is that dollar amount that's paid on halal investments that have very small amounts of impermissible income as allowed by our scholars. So there's a little bit of ijtihad or jurisprudence on this, but it has to do with giving away that impermissible money in one's investments first, because you don't pay zakat on something that is considered impure. And you never intend to benefit from it either. It's one of those things that we calculate for our clients. And then once that is calculated, it's reported out as a separate amount. And then after that's netted out, zakat is paid, or the zakat amount is calculated for clients. And we report that out to them. If you're doing it yourself, you would calculate purification first, which includes things like, small de minimis amount of interest income, for example. Every company's got, an accounts receivable or something. So there are going to be those amounts, and AOFI does call for certain thresholds. If you don't know what those thresholds are, it's going to be very difficult for you to calculate purification, by the way. So again, we calculate purification for our clients and also Azad Funds investors, incidentally. If you are an Azad Funds investor, you can go to azadasset.com right now and find our purification calculator there. And we report that out to you. You'll just need to know the number of shares and the holding period. So again, purification amounts are to be given away and subtracted from portfolio's value before you calculate zakat. Okay. Last chance for questions here before we wrap things up. And again, if anything occurs to you after the session today, please feel free to reach out to us. Hello@azadasset.com. We'll talk about that in just a second. Not seeing any other questions. I will just remind everyone that we have on-demand webinars at azadasset.com. I mentioned already our 21st annual Zakat webinar. That's something available to folks on demand right now. Please check that out. Our 2025 State of the Company presentation we do every year is also there, as well as a really informative session that was done in late December on Islamic estate planning. I mentioned this because it's a great resource. We're always available for you, but a lot of this stuff is already prepackaged and easy to consume at your convenience. If you take a look at the website, again, it's azadasset.com. That is going to conclude today's presentation. I'd like to thank all of you today who took the time to be here with us live. If you'd like more information, again, I can't say it enough, please do reach out to us at hello@azadasset.com. Also, be sure to follow us on social media. The handle for our Facebook and YouTube accounts is at Azad Funds, and you can find us on LinkedIn under our full name at Azad Asset Management. So thank you so much again for your time today, and we'll be seeing you soon.